So I was just getting ready. Uh, Obviously, one is I didn't eat my tacos, and it feels weird when I'm eating cornflakes. The one that the shooter says I did it on purpose because I don't want the president to take the credit for it. Uh-huh. And the cyclist, if I would have taken my bicycle, it would have been different. So just so you will see that the sense of humor is just from my dad, is not mine. So I think we're ready. So Cesar, like we said before, Cesar is going to talk about everything that is involved in the family trust. So we'll give him a round of applause.
Good morning. How you guys doing? Good. Let me just okay, so I can get an idea. So my name is Cesar Yanez. I am the owner of My Legal Document Center here in Woodland Hills. We're a legal document preparation company where we specialize in living trusts and corporations. Do I use the
Is there a mouse there?
Yeah, you can use the mouse or the keyboard.
Do you see it, the mouse? So just click on.
Oh, there we go. Okay. So I'm a legal document assistant registered with Los Angeles County. I've been doing this for about maybe 11 years now. I started off in the mortgage business and then I ventured into this, try to help out the customers, when something were to happen, if they were to happen to pass and all that good stuff. With this license, you can pretty much do anything that has to do legal-wise, bankruptcies, child support, restraining orders. It opens up a vast number of opportunities. But the main purpose of My Legal Document Center is exclusively just living trust and corporations. We don't handle anything else besides that. Day in, day out, the girls at the office, they're constantly just working on the trust, investigations for properties, everything we cover. I'll go over everything. We cover everything from A through Z to ensure that all customer has all the information that they need and all the steps that are there to be able to protect those assets at the end of the day. So a living trust. The true reality of a trust, and in order for you guys to have that trust, is for you as an individual to be able to relinquish all of your interest and deposit it into that trust. What exactly does that mean? So for example, imagine if we have a little basket, and in that basket, which is the trust, we put in the homes, the cars, the jewelry, the designer bags, bank accounts, investment properties, everything will be sheltered. So now, you as an individual, what do you have? I don't have anything. Everything is under my trust. I just have the 15 bucks I have in my pocket. That's the only thing that I own. Everything else is owned by the trust. So in reality, that's the whole purpose of being able to obtain that trust. We sometimes get misled and we think that maybe a will is the right way to go, or we don't need power of attorneys to be able to assure that everything's okay. Because we heard from el compadre that knows someone across the street that said that one time it's always better to remove yourself from title and add your kids, so if something happens to me, my kids will be protected. That's probably one of the worst mistakes that can happen. Another thing that happens most of the times is that we tend to listen to other people, remove the people from title and add the kids once again, but in order for Medi-Cal and Medicaid not come in afterwards and try to take up on that property. So we gotta remember that there's mechanisms that were built at one point in time in history. Someone said, well, how do I protect my assets while I'm alive and for my future generations? So they came up with a living trust. It's a legal entity within itself, so you completely separate yourself from it. So even though you think, well, I don't have anything, I don't own anything, in hindsight, technically you don't, but overall you govern that trust. You get to do anything and everything within that trust. You're able to refinance your properties, you're able to sell your properties, you're able to buy more properties, you're able to do anything that you would do as an individual, but now with that protection, with no restriction whatsoever. You're able to one day say, you know what, I want to sell and I want to move out of state or back to my home country. you're more than welcome to. It shelters, it protects it from all that stuff. When we establish a trust, we have to know that in order for the trust established, we have to have a successor trustee. That is the person responsible, that is your representative when you are no longer here. Such person will be able to maneuver everything when you are no longer here. They will be the ones that will contact the real estate agents to assure that the property is gonna be sold. If they choose to liquidate those properties, bank accounts are the ones that will go to the bank accounts, contact your life insurance policies, 401ks, any investments, any assets that you have, they are your representative. It's always good to have a couple, because if you put only one person and that person happens to fall ill or is incapable or unwilling, then there's always another person that will come up and behind it to assure that everything is okay. He or she does not have the power to change the trust. He or she does not have the power to say, you know what, give me the money and I'm gonna make sure I give it to my brothers and sisters who are in the trust. Doesn't work that way. They are just there as your representative. We always have to designate who the beneficiaries will be. We tend to think that, okay, you know what, let me give $5,000 to one kid and $20,000 to the other kid. If that is the choice that you choose to have, or any dollar amount, we have to find out to the closest percentage as to what that will represent out of a total of 100%. Because we gotta remember, everything has to be totaled to 100. If there's 4 kids, you wanna do equal parts, it'll be 25 each. It could be 50 for one and the other one will divide. The customers get to choose how everything is gonna be distributed, but everything has to be done in percentages. Cesar, I have 2 homes, but I wanna leave one home to one kid and the other home to all 3 of them. Perfect. The trust is tailored to the needs that you want, so it's built based on what you need. There's parents that have special needs kids, so they put provisions into the trust to assure that that kid that may have a terminal disease or may have a Down syndrome or autism, they'll be able to assure that that kid is taken care of when mom and dad are no longer here. Within the trust, we put all 401ks, investment properties, cash plans, crypto, everything goes into the trust. There's a section in the trust where you put cars, jewelry, and stuff like that, because you may have, for example, designer bags or jewelry that you want to give to your daughter, or a classic car that you want to give to your son and pass along to generation. That is the way that we set it up and instruction. Once again, the customer gets to choose how everything will go. And during our intake is when we discover any stuff, how everything they want. They may have properties in our home countries. They always tend to ask, hey Cesar, I have a property in El Salvador and in Mexico, does this include it? Unfortunately, it doesn't. It's a different jurisdiction, so they would have to do something in their home countries to be able to establish that portion of it. You know, what are the benefits of the trust? You guys as real estate professionals have probably seen when someone passes away and there's no trust established, the property will most likely go into probate. That's when you see kids or family members rush to retain the services of a probate attorney or real estate attorney to be able to take it and protect it from that probate process, which is a very lengthy process. It costs a lot of money. The whole design behind it is, if there's no trust or there's nothing established, then they have to assure that the person that passed away has all their liabilities checked off, meaning if they owe money to the IRS, it has to come out of the probate. If they owe money to Honda, Visa, anybody, it has to come down to it. If they owe child support, if they took Medi-Cal, Medicaid at one point in time, if they received food stamps at any point in time in history during their life, that happens to be paid through that process of liquidation during probate court. One of the things that we tend to think is that what's the difference between a living will and a living trust? The living will, there's a couple of people here, we all can get a piece of paper, we label it living will. I, Cesar Yanez, leave everything to my kids, 50%, and if I happen to pass, I want to be buried, your list of wishes. We have a notary here, they sign it, they say, hey look Cesar, I have a document that says here that everything's protected, so if I pass, all my stuff are protected. Doesn't work that way. The living will does not protect protect it from probate. The trust is the one that protects it from probate. The reason why is because when you create a trust, there's other steps that need to be taken in order to assure that that trust will have its function. One of those first steps is to be able to transfer title from individual into the trust. I can give you a binder, that's the black binder we give. It can be wrapped in gold. It can be worth $10,000, that binder. But if we did not record those deeds to county or the pertaining county where the property is located, it will have zero validity whatsoever. You gave your money away, nothing is protected. So that's why when we set up the trust, we assure that those deeds are recorded so that way they don't have any problems in the future when, if they happen to pass and the kids open the trust and be like, oh look, mom has a property in Glendale and has a duplex in Montebello. Let's go out and see how we can, sell those properties, or renting, everything would stay the same. Obviously, the benefits of the trust is that there is a private entity. There is no database where you can see, oh, let me see who the owners of Los Gomez Family Trust is. There is none. So in comparison to a legal entity like an S Corp or a C Corp or an LLC within the state of California, we can log into the Secretary of State and see exactly who the owners are, what steps they had taken, who's the original incorporator. When it comes to a living trust, there is nothing like that. You have that privacy factor. Because you set everything up and you've sheltered everything under the trust, that's why it protects it. It's a tax shelter. It does many functions with the trust. It has its own EIN number. You can do business with the trust. You can, work out of your trust. There's so many things that can be done. It's not just subject to one little thing that we tend to think within our Latino community, that it's only designed that if I pass and protect it. It has a lot more functions while you're alive. Obviously probate meaning leading the way is the one that's the benefits of it. I honestly haven't seen a con to the trust and say, you know what, I think this trust is hurting me, so let me take it out of the trust and be able to function out of the trust. There's not one. There's two types of trust, of course. There's an revocable trust and then there's an irrevocable trust. The revocable one, we can change it, we can amend it. Cesar, we have a brand new member of the family and we want to make him or her participant of the trust, so we're going to amend the trust. Cesar, at the same time, as people grow, as people are born, people pass away. Cesar, we had a family member that passed away, so we need to amend the trust to be able to adjust it to the current life that we have right now. With an irrevocable trust, the moment that you sign that document and then notarizes it, you lose 100% of your possession of that trust, and it now falls under that complete trust. You can't 2 weeks go back and say, hey, you know what, I don't know what I was thinking, can we tear it apart, pretend nothing happened? It doesn't work that way. It's the two types of trust. We always hear that there's a Medicaid trust, a trust for this and a trust for that. There's only two types of trust. The difference is the provisions that go into it and the Q-tip portions that make the trust different from a revocable to an irrevocable trust. Like I said, why is it important? Because it protects it, it shelters it, it makes that streamlined process. So on a hypothetical scenario, if mom and dad pass away and the kids, they know that the property is under the trust, they will obviously receive the trust. They don't need to notify the county that mom has passed away or dad has passed away. They don't need to notify government agencies, attorneys, nothing. That process, that transfer of power is automatically. Property taxes stay the same, as you probably know, because back in 2024, they put everything under the trust. But Cesar, I still owe money to my lender. Everything will stay the same because it's under the trust. So the bank cannot come in and recall the loan and say, hey, you gotta pay me the money back, because it doesn't work that way. It just stays the same. So they're able to, the beneficiaries are able to live within that trust for years and years to come. They don't necessarily need to be like, we need to sell the property because we want to protect it for whatever reason. No, it's already under the trust. If they choose to, they have the power to do so based on the stipulations that the trust has. So that saves time, saves money, and it gives that peace of mind to your beneficiaries to assure that everything will be taken care of. You know, obviously probate is the main one, you know, when it comes to that, because I have heard of different stories within different counties that when people pass, they get letters from the county saying the property no longer belongs to them. They put liens into the property when there's no trust based on the Medi-Cal, Medicaid help that they receive, everything, you know, if a customer received $200 in food stamps in 1995, within that process, they'll find out and they'll take that money. It'll go. Once again, you know, what's the difference between the living will and the living trust? Is most of the time the way that is designed, the transfer of power is automatically. The trust is the only one based on the jurisdiction language that allows it to be able to register into county. A living will, unfortunately, would not. It'll give an indication to the probate judge or to the court to be able to say, well, this is exactly how Mrs. Martinez wanted everything to be done, so we'll follow that, but it's still subject to the probate court. A trust won't allow that to do it. The key elements of the trust, when we establish the trust, when we do it, obviously it's a revocable trust. The components behind the trust in order to make this whole estate planning documents the way that it's supposed to function, we have to have a memorandum of trust. It's a smaller version of the trust without divulging any of the personal information as to provisions that are included in the trust, how everything's going to be distributed to the minors if they decide to. So it's just a simple factor as to who are the owners, who are the trustees, and who are the successor trustees. So for any administratively, any banking purposes, any sale of properties, most of the times the memorandum will be the one that you'll give to the customer, and they'll accept that as a form of a reduction, you know, a smaller version of the trust. The pour-over will, that's important. That one and the trust go hand in hand. The function of the pour-over will, it protects anything that's not named in the trust. It's kind of like a second ring of protection. It shelters it. The second function it has, it names who the guardian of your young children will be. Because if you have kids that are minors, you want to assure that the court and the world knows, obviously, if mom and dad are no longer here, my 3 kids are going to go to my sister, and if my sister's not available, they're going to go to my brother-in-law. So all that is stipulated under the pour-over will. The living will, what's going to happen to me when I pass? Do I want to be buried? Do I want to be cremated? How? You know, that's a very taboo topic within our community, but in reality is one of the most important things that has to be done. I lost my cousin May 16th of this year, and there was, obviously he had all that stipulated, but when that situation comes and you're in that time and space at that moment grieving the loss of a loved one, there's a lot of emotions that go on. So if there's nothing established as to what he wanted or what his wishes were, a living will give that peace of mind to assure, you know, such person wanted to be buried, wanted to have Catholic service, and wanted to have a mass. Because there's a lot of ideas that happen, so it's very important, and we tend to think, you know, that's not going to happen, you know, let me not think about it so I don't call it, or whatever our beliefs might be, but it's very important to have that situation. Certificate of trust, they always ask for that. You know, lines of credits, any financial stuff, they normally require certificate of trust. When you are trying to open a bank account at your bank, that's one of the documents that will most likely be needed. These 3 ones are very important. We tend to minimize it or think that, yeah, you know what, they're important, but not so much. General power journeys, as our parents get older, you know, they start developing diseases, amnesia, whatnot, they're not able to function in normality. Maybe they have a car still under their name, will they co-sign for you? You still owe money into the loan. With that POA, you're able to make those decisions for them. You're able to talk to the banks, to credit cards, make payments, property taxes, anything that has to do with the trustees. That POA will allow you, in its normality, for you to function normal in a normal setting without interrupting anything that might be, because they might be business owners where they have to make payroll and stuff. With that POA, they'll be able to do that through different payroll companies. Just an example. These two, the Advanced Health Directive and the Durable Power of Attorney for Healthcare, very different. There's a lot of misconception between these two. The Power of Attorney for Healthcare, I am nominating such person to be able to speak on my behalf or be able to get information in regards to my health. Talk to doctors, surgeons, medical records, prescriptions. I need to move them from hospitals. My mom, her POA, if she needs an emergency surgery, this is gonna allow me to give that order, go ahead and help mom, please save her life. The healthcare directive is when mom is no longer available to make decisions on her own. She's in coma, she's brain dead, and the only thing that's keeping her alive is the breathing tube and the feeding tube. This directive will indicate everybody how I wanted to prolong my life, or if I wanted to prolong my life, if I can no longer make decisions on my own. So we tend to think that if we have one, it covers the other. Unfortunately, it doesn't work that way, and it's best to have this ahead of whatever surgery needs to be done. Because the thing is that they give that information at that moment in the hospital, and you might be going there thinking that you're gonna get the surgery. You don't think straight at that moment, and everything happens so fast that it's best to be able to take that time and say, well, no, let me think, do I really wanna donate my organs? Let's do the pros and the cons. You have that flexibility. And especially with the type family, you get to discuss that with your kids. Hey kids, I wanna be able to prolong my life. No mom, I think you shouldn't based on whatever, so it gives that flexibility. That golden ticket right here is the trust transfer deed. We have to make sure that property is transferred, or whatever properties are transferred, the more properties you have, to assure that those properties are included in the trust first and foremost, how everything is gonna be distributed, because each property might go equally amongst all the kids once again, or it might go individually to different kids with different provisions. So we gotta assure that the trust transfer deed affects it. If you have 3 properties under the trust and I decide to sell one while I'm alive, does it affect the trust? No, it doesn't affect the trust whatsoever. We just amend it to assure that it's properly done. When something happens, they don't look and say, 123 Main Street, it's already been sold, but it wasn't updated in the trust. So we have to make sure we update it. So that's one of the things that happens. And then obviously, how much does all this cost and all that good stuff? What does it include in the package? We have all that is the revocable trust, the memorandum, the pour-over will, the living will certificate. We generate the EIN for the trust. One of the step number 11 is very important. When we sit down with the customer, we obviously sign, we notarize and all that stuff. But we do at the same time is at the customer's home, we scan everything for them. So they leave with a physical copy of the trust, the original copy, fully executed, but at the same time, they'll have a digital copy via USB. Why is that important? Tremendously important. Majority of the times, our parents are not tech savvy. How are they gonna photocopy 50 pages of a trust or the whole package, which is like about 200 pages? So they'll have everything in the USB. Send it to the real estate agent, they'll send it to their accountant, to their doctor, to their loan officer to be able to facilitate that refi, so you have that right there. What my office had, what we stay with a copy is a blank copy, the one that we showed up that day with no signatures, and a colored copy of what they have as a record of what that trust does, what that trust has. When we record the trust transfer deed, our company name goes on the top of the cover sheet recording page. The reason why is because it has to have a receipt of who did that document. There has to be some sort of responsibility. Mr. and Mrs. Martinez, who did this document for you? I don't know, it was some Cesar, but I don't remember. No, it's right there. My Legal Document Center, which is a California corporation, and they'll be able to go back to us if they need any document, or if worst case scenario, the whole family happens to pass, which is very rare, but there's at least a record of who holds that copy. So that's very important to have. Thank you so much for the opportunity. Any questions, anything, I would be more than happy to.
Do you do an analysis, a meeting analysis first? I noticed on the bottom it says $500 deposit for application. Uh-huh. Now, is that just a consultation?
No.
Or
When the customer goes, like for example, we had a lead in Victorville yesterday, we went, I gave the whole explanation of everything. They're gonna think about it, that's perfectly fine. We step back, we go back and we wait for the customer, there is no consultation and everything. We give the whole explanation, my staff and I now give the whole explanation of what the trust embodies, kind of like the same thing that I gave to you guys, but more detailed, because a lot of questions come up. Well, Cesar, what happens if it is? What happens if that? A lot of technicalities, which are unique to that person, and then if they decide to move forward, we start building the trust, we start taking the intake. At that moment in time is when we collect that $500 deposit. If they say, let us think about it, we'll call you next week, that's perfectly fine. There's no money owed, nothing like that. They're more than welcome to come to the office. We're located in Woodland Hills at the Trillium Building on Canoga and Victory. 98% of the time, we visit the customers to their home. We have the staff that covers Inland Empire, San Diego County, Orange County, LA County. So wherever is it that they need, we have strategically people there that will be able to assist them for that.
since we do this a lot, you mentioned that adding your kids to the title, it was one of the worst things to do. Why do you feel it's that?
There's a whole bunch of factors. One of the factors that comes up is anytime you switch title, the county assessor might have that leeway to reassess your property taxes. That's one of the first things that happens. There's ways around that. If the customer, if the child lives there, then they might be able to, we fill out a different type of paperwork to kind of convince or let the county assessor know that they live there so that they reassess it. That's one of the big portions. The major portion where I say is one of the worst things to happen is, based on experience we have, I can tell you countless of times where I sit down at a table where mom and dad took themselves out from title and added the kids when they were single, when they were in their mid-20s, or when everything was roses and peaches. But now we fast forward to that sitting on the table, now they're married, now they have spouses, now they have kids, now the house is worth a lot more, and how many times the kids say, no, that house belongs to me now, but I gave it to you because of this purpose, and now I want it back so I can put in the trust to assure that all your brothers and sisters get it. Sometimes they just simply say no, and the parents lose, they don't have control, they're no longer owner of that property. And why did they do that? Because they were advised by someone. We had a customer, when we took down the application, the kids were under the trust, they had removed themselves, they put the kids. One of those kids was 14 years old. So remember, when you're doing the transfer, all you need to do is have the name and their status. You know, Mario Martinez, single man, so on and so forth. A 14-year-old kid cannot legally sign that document. So it went from a $1,500 thing where they needed to retain the services of an attorney and do a trial on title, I believe it was, to go to court and have that revert back into that. Why? Because they were advised by their tax professional to do that. You know? So that's one of the major things, is losing that control, because you gotta think about our parents, they go day in and day out to work, especially our Latino parents, you know, and everybody in general. You know, they work on holidays, long hours, on Saturdays, on Sundays, and at the end of the day, to not be able to put something to protect all their hard work seems kind of injustice.
Also the taxes when they sell the property.
Taxes come about. There's usually the percentages when they sell the property and it's under a trust. Once again, this is a tax shelter. You have a lot more flexibility to be able to reduce. The margin is a little bit lower because there's a lot of factors that you can go into it. You know, they can cash out money. They can sell percentages of the trust, which at the end of the day facilitates everything. Any other questions?
Obviously, you mentioned that if you don't change the title of the property to the trust, it has no validity.
Yes.
What about the personal property? The personal property, does it have to
The, like bank accounts and stuff like that?
Well, not bank accounts, but let's just pretend jewelry or vehicles.
So when it comes to that, when we sit down with the customers, there's a couple of instructions that we follow at the end. First instruction is we sit down with them, there's an envelope there for them, already pre-printed with the labels as to the county where those deeds need to go. So they have 3 options of doing that to cover. They have we can send it by mail, they can take it themselves, or we can take it via courier services to them and have it recorded. Once it's recorded, we give it back to them. Second instruction, bank accounts. If they have joint accounts with Chase, Wells Fargo, Citi, we advise them to be able to take that, go to the bank, everything is labeled as to exactly, and what they need to do is they need to vest those accounts into the trust. So everything is sheltered. They give you a piece of paperwork, they have tabs in there where they're able to put that in there. When it comes to life insurance policies, 401ks, those already have the beneficiaries, so we explain to them. On this 401k policy, you have your husband and your kids as your beneficiary. Do you want to leave it like that, or should we put it into the trust? We have to have the trust established first to be able to make those changes, so we help them contact the people. They normally send them a letter. It's nothing that they can do online or everything. Majority of those insurance companies will require a wet signature to be able to assure that. Under the trust, there's a section in Schedule A where it's a transfer of assets. We transfer bank accounts and everything to be able to establish there. The Schedule A has a paper where you're able to add those wishes, those jewelry. Let's say, for example, if you have a Chanel bag and you want to leave it to your daughter, you're able to put it at that moment in time. If 6 months go by and your daughter no longer deserves that Chanel bag, you can change it and put it. We're not going to amend the trust because your car is no longer active or the lease is over or jewelry or whatnot. You have separate type of paperwork that will allow you to make those changes while you're alive. So all those assets, personal things, go into the trust. At the end of the day, if mom and dad are no longer here and they decide to sell everything, remember you have a successor trustee, which is the responsible person. He or she will do the sale, and let's say they sold the last spoon of the house and they were able to sell everything for $10,000. That's how much we got for everything. The distribution here in the trust is that there's 2 kids, there's 50-50. So the successor trustee will be able to maneuver and say 50% are for you, 50% are for you. So everything will be sheltered under that portion.
Cesar, if me and my husband made a trust and he passes away, can I still change the trust?
That's a very good question. Husband and wife make the trust. Husband and wife decided that the distribution of the trust was going to be 50-50 for our 2 kids. If husband or wife, either or, passes away, the trust locks itself. It becomes an irrevocable trust. The reason why is because while you're alive, mom and dad decided that this distribution was going to be this way. When one of the spouses passes away, they can no longer make any changes to the way that the assets are being distributed. He or she has full control of the trust. He or she can continue to live normally, everything as we go. One of the third questions that we get is, Cesar, what happens if my wife passes away? If I pass away and my wife stays alive, what if she remarries? What if she finds love once again? I don't want her to sell the property and then my kids won't have anything. Very good question. Husband passes away, wife stays with the assets. If she decides to liquidate that property or say, you know what, kids, we're moving, we're going to San Bernardino because that's where our new life is going to be. If she decides to sell that, the husband's 50% will automatically go to the kids. The wife will be responsible for her 50%. She can do whatever she chooses with those 50%. The 50% that belong to dad go to the kids or the beneficiaries stipulated in the trust. I have only one time where they decided to remove that clause. The reasoning behind that is because husband and wife never had any children. So their logic behind that was, if I don't have any children and if I pass, I want my wife to have full control of all the estate and the monies that we have. I don't think it's fair for my parents to inherit my 50% when they didn't put a dollar into this. My wife and I built all this empire. So that's one of the reasonings behind it. If there are kids involved and you decide, if the customer decides that that's the best way to do it, by all means. We're not here to change them or advise them in any way. We're there to help them build and set up the trust the way they want.
Are living trusts only for married couples, or can anybody do it?
Anybody can help, you know? We get a lot of now single individuals that have assets or have multiple assets, that have businesses, so decide to protect it, you know? So you build that trust when you're not married, you'll be able to shelter that. If you own a property, if you own a business, fast forward to the day you meet someone that you love and you decide to get married, your assets are protected under the trust, because you have already opened your checking account for your trust. You most likely will make your mortgage payment through that account, so you separate all those assets without not even knowing, you know. You wanna cover that question?
And then, do you guys keep a digital copy also, or?
Yeah, we keep a digital copy of that. So everything goes to our cloud, which is an encrypted cloud, and if anytime you need it, you can call up the office and say, hey, you know, Cesar, can you do me a favor? I'm gonna have a surgery on Thursday, which had happened this week. Can you please email the medical power of attorney and the medical directive to my doctor? No problem. But let's say your mom, your sister, or your spouse at that time that they call, sorry, we cannot do it. It's only with you.
So, and if the county doesn't keep records of this, it's like if you don't have that binder or you don't have a digital copy and like you die, no one can get it.
We have a copy of it. So the county doesn't keep a record of it. The only government agency that will ask you for a copy of that is the Los Angeles County Tax Assessor, or any tax assessor countywide. The reason why is because when you transfer that deed, they wanna make sure that that owner of that property is just you. You can have your name as a form of a name of a trust, but they wanna assure that that is only you. If there's other people involved in the trust, say you add your mom or someone else, as trustees, they're gonna reassess your property taxes to qualify. So they're the only ones that will keep a copy of that. Nobody else has a copy of it. When we record that deed, there's on the cover page, there's our name, company name, so if anybody would want to, government agency would want to reach and say, hey, we need a copy of, what's your first name?
Fernanda.
Fernanda's trust, we'll be able to do, but only if they have court-approved documents. We can't just start giving out to everybody that.
Because I heard if you lose the digital and the binder, the county doesn't have everything on file, so it's like you go to probate anyways if you don't have the copies.
Unless there's safety measures, one of those safety measures is us recording that document and having our name on that cover sheet. So they'll be able to locate and say, my legal document center is the one that did that document. And we're registered with Los Angeles County, so they'll be good.
Cesar, if I lose the digital and a hard copy, will you give me a copy?
If you ask nicely, to you, yes.
Do you
If the
charge?
person
Yeah.
dies, the
If-
family can ask for it or no?
So what would happen in a situation like that is majority of the times, someone at one point in time during the family is gonna say, look, they have all these properties, they're gonna seek the services of an attorney or real estate agent, they're gonna pull title. Once they pull title, they know that the top portion, the person that requested this is my legal document center, they'll most likely will reach out to us. If it's a realtor, a family member, and say, hey, Fernanda's no longer here, then unfortunately, we can't just give that to them. They will most likely, the attorney will do a proceeding through the court, which the court will ask our company to surrender that copy of the trust to them, and then they take over.
And then for step-up bases, how do you protect the step-up bases and like, can you only do an appraisal at the time of death?
For the step-up basis, it's a little bit different when you have the trust. You have to indicate what the property value was at the time of the purchase and what the time of the death of the person, and that in between is the one that happens. But because it's under the trust, you might bypass, not have to pay automatically or immediately that step-up basis, because the trust will allow you to continue to live there as long as you want to. So the county will be able, that's county assessor, and let's say for example, your successor trustees will be able to maneuver that portion, say, hey, you know what, even though we're doing this, we wanna stay with the property for much longer, so we're just not gonna touch this right now.
And then the SEPA phases, that's not just for children, it's for anyone who's a beneficiary?
Exactly, beneficiary. Yes,
You mentioned for individuals creating a living trust while they're single.
Mhm.
Would a living trust take the place of a prenuptial agreement?
that's a very good question. I can't answer that directly, but based on the experience that we have seen, based on the whole time, it separates the assets. One of the things that comes out is if you have, if Fernanda has that living trust and she has her property, that's why I said if she's gonna have a bank account and she's gonna have everything under the trust. If she continues to make that payment without commingling spouse's money, then it's completely separate, it belongs to her. But the moment that she decides to make one mortgage payment from her house that she bought 10 years ago under a joint account, it's fair game.
Thank you.
Along with what you were saying earlier about the, for the most part, when we do a refinance, the lenders and title company will accept the property staying in the trust. There are some cases where if, let's say, but they have to examine the trust. If they examine the trust and it's something's not clear, they say, no, we have to take it out of the trust and into the borrower itself. Once the refinance is over, do you recommend them contacting you again so you can put it back in the trust, or can escrow take care of it
Yeah.
themselves?
But escrow can mostly take care of themselves. If they decide to do it, escrow will probably do it beforehand, have it recorded, so that way when the lender is about to fund the loan or everything, they'll check title, say, hey, it's under an individual. Once everything closes, if escrow decides to do it, or maybe they forget, or they don't wanna do it, whatnot, they can always come back to us, and it's $150 to add it back into the trust. It's very important to put it back into the trust.
This is more of a legal question, so you may not know this, like a what if situation. Let's say, what if they take it out of the trust and for some reason they forget? Are they like out of luck if something happens afterwards? Well, now the property's,
Now the
their name is not in the trust.
Yeah, that property has been taken out of the trust via recording, and so it leaves it vulnerable once again.
Oh, wow. Okay.
That's why it's important to be able to put it into the trust. And we normally tell them, we have customers that are in the process of buying a home, and the way that I explain to them is, please let your loan officer or your real estate agent know that you have a trust and you wanna put it into a trust. But I say that beforehand, depending on the type of loan program that you're going into, your lender might allow you to put it into the trust or wait till you finish at the end. If they can help you to do it at the end, escrow will most likely be able to help you. If they can't, all you have to do is reach out to us with the property address. We have all the information. We set everything up and send the notaries to be able to have that recorded.
Cesar, one more question. Do you approve for Dawson to distribute that to all of us? The presentation, they have that one, they have your information? Can he send it to?
Yeah, can you send just more like a PDF, not like
Yeah.
like in PowerPoint? Yeah. That'd be
So we can all have it.
I have a question.
Yes.
Yeah, you mentioned at the beginning of the presentation something about medical. There's a lot of persons, basically retired persons, that they don't wanna apply for medical because they're gonna go against their property. Trust protects you against that.
Yes, it does. Because one of the things that happens is, I'll share a little story. I did a trust for a supervisor for the Department of Social Services where they give the Medi-Cal and Medicaid food stamps. And I asked her and I said, what's the reality, what's the truth behind what you guys normally do if someone passes away? She goes, what's your reality, Cesar? That if I use Medi-Cal, Medicaid for the past 10, 15 years, if I pass, you guys will take care of that money. This was her answer. She goes, do you know how many homes there are in LA County? I said, well, hundreds of thousands. There was a million homes of LA County. You know how many people work in that department? If no more than 10. We don't have the manpower to check who if Maria Martinez had passed away, we're not checking there every day. How we find out, or how those people find out, is when the property goes into probate. They notify instantly when someone passes away. The Department of Social Security is notified. That's why bank accounts are normally frozen 3, 4, 5, 6 days after someone's death. Does exactly the same thing. They notify all government estate agencies, county agencies, and one of them is them. So they'll receive that letter and say, hey, Maria Martinez passed away, let us see what she owes. Oh, look, 1987, we gave her $1,000 in food stamps and aid. We put that in the bill. 10 years, she owes us $250,000. Let's send it to the court, so when they sell the assets, we get paid. But was under the trust that transfer powers automatically, first. Second, it has to be done as soon as possible. There's provision and dates in which the county can go in there and get it, and then there's dates where they can no longer go in there and get it. But since that transfer of powers automatically, it's very hard for them to know exactly who passed away and who did it, because you're bypassing probate. I don't know if that answered your question.
Juanito?
Yes, and I have another question too. I don't have to believe if trust protects us against an accident. Let's see if I have an accident, my property is in a trust. Can the attorneys go against the property or not, or it doesn't protect us against that?
So technically, you're no longer owner of that property. When it comes to an accidents, that's why majority of the times they say, hey, make sure you have the right coverages, like high coverages, 100 to 300, 200 to 500,000 in your insurance. If the insurance company is not able to bypass, they're unable to collect all the money from there, then the attorneys would try to go into your home. But because it's under a trust and there's no public information, it's very hard for them to penetrate that. Because technically it can be the XYZ family trust. So there's no information in regards to it. So anybody can sue anybody here and they can take you to court for anybody, but once it gets to that, it's a little bit difficult to be able to penetrate that portion.
Okay, another question, because if, let's say, I need to give, driver license in this case, if I have an accident, and obviously they want to title, I was gonna say title is under this name, and now it goes to a trust, is it?
Yeah, so there's a sequence of it. So it'll be Cesar Yanez, now on the sequence of the deed, and it goes to the trust. So because it goes into the trust, that's where they lose that connection, because the deed is not gonna say Cesar Yanez is the owner of the Yanez Family Trust. No, it's the Yanez or the XYZ Trust. So that's why it becomes that privacy factor. That's why they're not able to go in there and see, let me look in the database and find out who the owner of this trust is. There is no database. So they'll have a difficult time to be able to penetrate that, to go after your personal assets, because you have it under a trust.
Okay, thank you. And the last question is, what's the cost of your company with the trust? To make a trust with the company?
The cost to do the trust?
Yes.
What was your name?
Dawson?
Dawson is gonna send that to you guys, but it's $1,500.
Okay, thank you.
Thank you.
Are you sure?
Thank you.
But you were sharing?
Good morning. I have a question.
I don't think so. But they
If
can see it
I
on
have
the,
already a lease trust, and for example, I have my husband, as if I die, he's gonna get everything. But now my child, for example, in 2 years, and this year, he's gonna become 18 years old. Can I change the deed trust and say that my husband to my child? Now he's 18 years old.
If they're 18 years old, you're able to amend the trust and add your child, for whatever role you wanna do it. If you wanna add them as the successor trustee, or if you want to remove any provisions of how the money's gonna be distributed, you're able to do it. But wait till he turns 18 years old.
Okay, but I have to do it, for example, through your company, or I can do it myself, or I have to hire
So in order to amend the trust, you're more than welcome to, we'll be able to help you amend the trust, or if, you know, whoever did the trust is also able to amend it, just, you can't do it yourself because it's the special documents that need to be done. And you wanna make sure that everything is done properly. You know, you can either come to us, or just make sure that it's someone that is knowledgeable in order to amend the trust, you know?
And for amended the trust, you charge the same or different?
To amend the trust is $225.
Okay, tell you because kind of my clients, they had already a big trust. So sometimes they want to change or something, they ask me and they say, I don't know about it. So in
Oh.
case okay, so
Yeah.
great. Thank you so much.
No problem. Perfect. Thank you so much for your time. Appreciate it.
Very nice presentation.
Thank you so much, Cesar.
Thank you.
Guys, we forgot on Zoom to share the presentation that Cesar had on the board, but Dawson is gonna put it on PDF and he's gonna forward to everyone. On that PDF, there's the information for Cesar, and there's the cost also involved. Thank you all for the questions. We had another part that is already close to 10. We had another part where Dawson was gonna make a presentation. We're gonna leave it for next week. Usually we do trainings, what is it called, every other Thursday. So Dawson's part, we're gonna leave it for next Thursday. Thank you so much. And that's probably it.
Thank you.
Thank you.